What's going on, guys? So I got the weekly Q&A. I also have my general bias for the week, and I'm going to show you an example of why I love the higher time frames. So for a couple of Q&As, we have how to stay out of chop. So someone asked, by the way, before I get into this, we stream live every single day. Be sure to smash the like button below. And if you want to support the stream, be sure to use coupon code CoveTrader. Also, below is a link to our free Discord. We have free exclusive prop firm discounts and everything else in the description of the video. All right. So, one of those things that keeps somebody asked me, a lot of people ask, how I stay out of chop. I would say the biggest thing. So, here's yesterday. We were talking about it when we were here. I think the biggest thing to stay out of chop is just kind of like what I do is I'll just kind of draw something like that. This is the pattern that we're in, and then not really trade it in there because all you're doing is forming this pattern, right? You're not doing anything else. So there's no reason to buy or sell in the middle of a pattern. Wait until it breaks out or breaks down. If it's not a pattern like this, if it's a channel where it's just, maybe it's something, along the lines of, maybe it's something like this, you're just kind of connecting and just saying, hey, this is the channel and I'm not going to take any trades after. Or what you do is I'm going to play the bottom of the channel. I'm going to buy and I'm going to sell the top. And you're just going to play the channel over and over and over again. Some people like doing that where they're just playing the bottom, buying the bottom, selling the top, and just they keep doing it until it breaks. Eventually you will take a loss, but you play the pattern or you play the range. One of the other things is how I deal with drawdown. So if you have an account that has intraday drawdown, my biggest thing is I move my stops up. So say like the other day, I bought this, right? I will not just keep my stop here and just let it run and then say, hey, if we don't hit, your final TP is all the way up here. Like if we don't hit this final TP, I'm not going to sell out. And the problem is you can go all the way up and then it comes all the way back down and you can blow the account. I move my stops up. So when we're breaking out like this, I like to move my stops after the candle closes at the bottom. So I would just slowly move this up, move this up, move this up, and then I would have gotten taken out. So that's typically how I like doing it. I just kind of move my stops up on the bottom of the 1 minute candle. And, obviously you take a little bit of drawdown, but it keeps your drawdown tight on winning trades. What I look for a prop firm, I use the top prop firms. I look for deals. I buy deals like this week, Bull Knox, 91% off. I'm in on that. Apex, $85 lifetime. I'm in on that. I look for deals. If you're not running a deal, I'm pretty much not buying the account. My funded futures, $200 core resets. They also have the buy one core, get one 25% off. I'm in on that. The best way to get profitable, somebody asked the best way to get profitable is on the weekend. Are you back testing? Are you looking at the charts? Are you in this on the weekend? You got to be treating this like a business. If you're not treating this like a business, and you're just sitting down on Monday at 9:25 before the market opens, and then you get up at 4 o'clock and you say I'm done for the day, that's probably not going to get you there. If you're not testing out indicators, like these are all indicators I've tested out, back tested, forward tested. There's even more that I've taken off. Strategies and things like that. If you're not doing all this, then you're not going to it's going to take a while to get profitable. The other thing is treating evals differently than funded accounts. Do I do that? All right. So this is one of those things. I personally do that because my goal is to get a funded account as fast as I can. I am not worried about evals. Even when I'm like quote unquote YOLOing evals, I'm still passing 1 out of every 3. Sometimes even 1 out of every 2. So for me, it's not a big deal because the time cost, I could pass the account in 1 day, 2 days, 3 days, versus trading it for real and then passing it in 10 days or 12 days when I'm still passing at a higher rate. But I think if you're not profitable, you should be treating them as a live account so you don't pick up bad habits when you go to the funded account. So for you, I would probably say treat the evals like a real account. Plus, it's going to save you money and it will give you more practice and time in the seat when you get that funded to push it over for a payout. Any other questions? Come on the live stream, ask below in the video, and I will get back to you.